Every day it feels like we're just flooded with economic headlines. One minute things look up, the next, maybe not so good. It's just this constant stream of numbers and reports. And honestly, trying to figure it all out, it can feel like a full-time job. So the big question is, what's really happening with the economy right now? And what does all this mixed data actually mean for you? That's what this deep dive is all about today, cutting through that noise. We're taking a really close look at a set of sources, mainly this great overview called Navigating Mixed Signals, Economic Overview, and Outlook. It pulls together the latest stuff the Fed's Beige Book, the newest CPI numbers, retail sales figures, to give you a clear, concise picture of what's going on both here in the US and globally, too. Our mission, really, is to pull out the most important bits of info so you can feel genuinely clued in on what's driving things. Okay, so let's unpack this a bit. What we're finding in this deep dive is that the U.S. economy isn't exactly sprinting ahead. It's more like a jogger wading through mud, you know? Making progress, sure, but it's slow going. It takes effort. Our sources, especially that latest Beige Book from July 16th, 2025, they point out that U.S. economic activity ticked up only slightly.
Yeah, and what's really interesting there is digging into what slightly actually means in practice. The Beige Book, it's the Fed's qualitative report, right? They talk to businesses, contacts on the ground across all the districts. It's a crucial grassroots view. And that view, it shows 5 Fed districts reporting modest gains, 5 saw basically flat activity, and 2 actually noted declines. So, like the source says, this is hardly a broad-based boom, not at all. And the feeling underneath it all is, well, persistent price pressures are still there. The consumer spending seems to be weakening except for autos, and the overall outlook is kind of stuck between neutral and maybe slightly pessimistic.
Okay, so that top line number, slightly up, hides quite a bit of variation then. What happens when we peel back those layers? If we look at specific sectors, what kind of strains or maybe resilience are we seeing underneath? Let's maybe start with jobs, the labor market.
Right, the labor market. So on the employment front, the Beige Book says it edged up only marginally, and businesses are described as wary. Hiring is specifically called cautious. Wage growth, holding at a modest pace. This isn't just abstract. It suggests businesses are hesitant, maybe holding back on big expansion plans because of uncertainty.
Yeah.
And that can definitely make employees feel a bit less secure. It's not the confident hiring you'd see in a really strong economy.
Makes sense. And inflation. That's definitely something everyone's feeling. The Beige Book says prices went up across all districts. Some call it moderate, others modest. But hang on, if overall activity only ticked up slightly, does that mean inflation isn't just about strong demand? Is it more about those rising costs, like tariffs, maybe?
That's exactly the implication. Yeah, absolutely. Prices increased everywhere. 7 districts called it moderate growth, the rest modest. But the crucial part is that input costs are rising. Tariffs are specifically mentioned. And the source is really clear. Businesses everywhere are feeling the squeeze. So this pressure on costs, it's significant. It points towards more of a cost-push inflation, where higher production costs get passed along rather than just booming demand pulling prices up.
Okay, so the job market's cautious. Inflation's biting from the cost side. How are people and businesses actually reacting? What about spending and manufacturing?
Well, we're seeing a definite slowdown there. Non-auto consumer spending, so excluding cars, actually dropped in most districts. Auto sales also slid modestly. This suggests households are tightening their belts. Maybe inflation's eating into their spending money, or maybe it's that job market uncertainty we talked about. And similarly, manufacturing activity keeps edging lower. That signals ongoing industrial headwinds. It's a real challenge for producers dealing with costs and shifting demand. It points to a broader slowdown in that sector.
And credit. Are people rushing out to borrow money, or is that same cautious feeling showing up in lending too?
Oh, it's definitely showing up there. Loan volumes did rise slightly, but the report really stresses that policy uncertainty and economic uncertainty are top of mind, which basically means lenders and borrowers are not racing ahead. It's a cautious financing environment. Both sides are carefully weighing the risks, given everything that's going on.
So if we pull all these threads together from the Beige Book, the cautious hiring, the sticky inflation, consumer spending pulling back in many areas, hesitant lending, what does that tell us about the general economic mood? Are businesses feeling optimistic, or is it something else?
Well, the economic outlook reported is far from bullish. That's pretty clear. Only 2 districts actually expect growth to pick up from here. The rest, they're anticipating things staying flat or even declining a bit. And think about what that means for business decisions, right? If you don't see a clear path to expansion, why would you ramp things up? So hiring plans stay subdued. And instead of planning for growth, businesses seem to be bracing for those cost pressures to continue. It's more about managing the current situation than expanding aggressively.
Okay, let's try and connect this to some of those fresh numbers that people might have seen pop up in the news recently. Do these latest data points confirm this sort of cautious picture, or do they maybe paint a slightly different story?
No, they largely seem to confirm it. Take U.S. industrial production, reported July 16th. It rose 0.73%. Now, that's a little higher than the previous 0.66%, but like our source says, it's not exactly a breakout. Industrial production often gives you a sense of the economy's underlying health: factories, mines, utilities output. How much stuff are we actually making? Then you've got the U.S. CPI, the inflation number from July 15th. Annual inflation came in at 2.7%. That's a touch from 2.4% before, which tells us price momentum remains sticky. Those costs aren't coming down quickly. And finally, retail sales for June reported July 17th. They were up 0.6%, which is a rebound from that negative number last month, minus 0.9%. But, and this is key, the source stresses that underlying consumer appetite remains uncertain. The bounce is good, but it's not a clear sign consumers are back in a big way.
Yeah. That really paints that picture of the jogger wading through mud for the U.S., doesn't it? But is this cautious mood just a U.S. thing? Or are we seeing similar kinds of patterns playing out elsewhere around the globe? What's the international perspective telling us?
It's interesting. When you look beyond the U.S., you definitely see a varied global picture. Take Europe, for example. Their trade surplus widening, driven by exports. That suggests a different kind of strength, potentially, even while their core inflation is staying anchored around 2.3%. So maybe export demand is providing a bit of a buffer for them, which is different from the U.S. focus on domestic consumption right now. It sort of hints that global demand might be patchy, but some regions are finding growth through trade.
Okay, so Europe's got its own dynamic. What about the UK? Is their story similar, or are they facing a different set of challenges?
The UK, yeah, they offer a really unique mix of pressures compared to both the U.S. and Europe. Their consumer prices, reported July 16th, rose 3.6% year over year. That was actually higher than people expected. And on top of that, you've got pretty strong wage growth at 5.0%. But, unemployment is also ticking up to 4.7%. So that combination, persistent inflation and rising joblessness, that points towards a potentially difficult stagflationary kind of environment. It really sets the UK apart from both the US's muddy jog and Europe's export situation. It's a tricky spot.
Wow, okay. So after digging through all of this, the U.S. picture, the global comparisons, all this nuanced data, what's the main takeaway? If we had to boil it all down, what's the big picture you think people should walk away with from this deep dive?
I think the overarching message is pretty clear. The U.S. economy is moving forward. But like that source put it so well, it's with all the enthusiasm of a jogger wading through mud progress, but slow and tiring. It's really about these modest gains being kind of overshadowed by this underlying caution.
Yeah, that analogy really sticks, doesn't it? And the details we've gone through today really back that up. So just to recap those key things, keeping that jogger stuck in the mud, so to speak.
Right. We're seeing those persistent price pressures, that cautious hiring we talked about across businesses, and a consumer who seems to be, well, pulling back in a lot of areas. And all that together means that the risk remains tilted to the downside, even when you see those modest headline gains. It's not, a collapse or anything like that, but it's definitely not a sprint forward either. It feels like a time for continued vigilance, not really unchecked optimism.
Which leads us right into our final thought for you, the listener. So what does this neutral with a soft underbelly economy actually mean for your personal outlook? Given all these mixed signals, the inflation that just won't quit, and this cautious consumer mood, how might you approach your own spending or saving or maybe planning for the next few months? What really stands out to you is the most critical piece of information from our deep dive today. Something to think about. Thanks for diving deep with us.